Australia's coal and gas exports are expected to face up to a $68 billion hit due to a slowdown in global demand and reduced supply chain disruptions. Commodity prices are projected to return to pre-pandemic values as markets stabilise following Russia's invasion of Ukraine. Australia is set to generate a total of $459 billion in exports for the 2022-23 financial year, but that figure is expected to drop to $391 billion by the next year. Joining me live is Energy Users Association of Australia CEO Andrew Richards. Thanks for joining us, Andrew. So what do you make of these predictions in commodity prices over the next year? Will they start to come down? And what is your expectation of the impact that's going to have on Australia's bottom line?
Yeah, look, good afternoon, Kenny. Look, from an energy user's perspective, to see cheaper energy prices is obviously a very good thing. That goes to our manufacturing base, and we can start doing things like producing food cheaper and building products cheaper. So from our perspective, lower energy prices are obviously something that we would welcome, and that's why we welcome the federal government's intervention in the gas market. The issues of broader economic impacts back to pre-COVID levels. I guess these extreme prices were never going to last forever. Whether they'll continue on at this high price, I guess is anyone's guess at the moment. We're still seeing high gas prices going forward, though it must be said, in the $30 to $40 per gigajoule range going out the next couple of years. So while coal may be coming off, I think what we're seeing is that gas prices, international gas prices, which impact us here in Australia, are likely to stay high for some period of time, which is why, again, the federal government has intervened in the way they have.
Yeah, like you say, it's anyone's guess. I mean, how much weight should we put on these forecasts? Because aren't we always at the mercy of factors outside of our country's control? Isn't it a big draw card on the budget, depending on how China manages COVID over the next year, Russia's invasion of Ukraine? What are your thoughts?
Yeah, so how many black swan events do you want to have, Kenny? We seem to be getting one a month at the moment that come out of left field and impact us. Obviously, the big one is what's going on in Ukraine. Hopefully, that sorts itself out pretty soon. But quite clearly, people are looking to get off Russian fuel because it's an unreliable regime, and they're looking to reliable countries like Australia, which is great for us. So I think we will continue to be a major exporter of fossil fuels, gas, coal, and the like, for many, many years to come, because we are a reliable supplier. Our view as domestic users of those fuels, though, is that we need to make sure that the domestic economy and domestic manufacturers and domestic consumers don't pay those high international prices. So there'll be many, many more things to come as we go through what is a global energy transition. So there's going to be many more bumps in the road of a global energy transition that are yet to come.
Yeah, the New South Wales Parliament is returning tomorrow to put a price cap on coal. Energy companies say the price caps mean we shoot ourselves in the foot over the long term because it discourages much needed investment in new gas resources and coal or other energy sources as well, meaning higher prices in the long term. Is that something that we should be concerned with? Should we believe with what they are telling us?
Look, it's an interesting one. 18 months ago, Kenny, the gas industry was selling contracts at $8 to $10 per gigajoule, which is actually below the current the proposed price cap. So I'm assuming they were selling gas and making a profit and continuing to drill. So 80% of the gas that we pull out of the ground in Australia is exported. So they are contract commitments that we have with countries like with Korea, for example. We export a lot of spot cargoes. So 80% of the gas we pull out of the ground, they still have to drill, still have to explore for that, still have to get that out of the ground. And the 20% is for domestic use. If you look at what the average cost of production is for Australian gas, and this is the ACCC looking at this, it's anywhere between $4 to $7 per gigajoule. So if you're drilling for gas at $4 a gigajoule and still able to sell it at 12, I find it hard to believe that you wouldn't continue on a path of exploration and drilling because you're making a 200% markup. So we've seen these sorts of comments before. So when Western Australians put in place a domestic gas reservation, the sky was going to fall in and investment would stall. That didn't happen. The Queenslanders respected gas reservation policy, same sorts of complaints, nothing bad happened. Investment continued to go on. So we think what they've come to here with a temporary price cap is something that gives everyone a drink and allows the entire economy, not just the sector of it, to continue to prosper.
Well, it's a complicated issue. Andrew Richards, thanks so much for your time today.
Thanks, Kenny.